Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you would like to receive trading signals from me, myself, or the rest of the team here at Daily Market Movements, then you can do so simply by visiting our website. Once on the website, you'll see that we charge a very small fee of $249 for a year's membership. What I'm going to do is leave the website link below this video in the description, so if you do want to join our team, all you have to do is simply scroll down now, click on that link which will then take you to our website, and then that's where you'll then be able to join our service. Thank you very much, and I hope to see you on our team soon.
So guys, in front of me is the gold over the US dollar charts, and as you can see today, we've had a very volatile day trading here in the gold markets and pretty much across the majority of markets, and that is due to the fact Pfizer, which is one of the largest pharmaceutical companies in the world, based in America, come out with the results for their third late trials with regards to the coronavirus vaccine, and wow, did they blow it out of the water. They've reported a 90% success rate with their third trial vaccine, which is phenomenal. You know, Dr. Fauci, who is the chief of medicine in America, the chief of health, not medicine, he come out saying that, you know, to expect anywhere between a 50 to 60% success rate with these vaccines, and obviously Pfizer have absolutely blown it out of the waters with a 90% success rate. So that's why we've seen the stock market rally so high today, and as you can see, gold has absolutely caved in, and I do feel really bad for the gold traders here, because it looked to me that we were on track to go and reach the all-time highs back up at around 2,100, and we were going to hit 2,000. You know, the session high today was 1969. Was 1960. So you know, we were 40 points away from hitting 2,000, and obviously Pfizer then announced this news about their late trials, and as you can see, gold from there pretty much caved in. So I did have a gold signal on my signal team, and unfortunately that did hit our stop loss today down at 1950. So sorry to everyone in the signal team, but I'm sure that they won't mind, because we've had such a good week. You know, we've had such a good previous week, and even today we made some phenomenal trades in the indices. So that's trading. You know, no one could have really forecast this news to come out today when it did. So you just got to take this on the chin and you know, try and earn the money back in a safe way. So where am I forecasting the gold markets to go from here? Well, as you can see, we're now testing the bottom of that consolidation phase, which is that blue rectangle that I've drawn on the chart. So I find support roughly around 1850 to the 1860 area, and that's where we're currently trading at. So it'll be very interesting to see whether we are able to hold that pattern, that support. If we can, then I do see a return of a rally here in the gold markets, and I'll look to first of all try and conquer that 50-day EMA around that 1909 area. So, you know, 1900s, that 1910 area where the 50-day EMA currently sits, is where I would be aiming for. You know, as I mentioned in previous videos, the gold charts have built a base around the 50-day EMA in the past month to a month and a half, which is typically a very bullish sign. You know, as you can see that a 50-day EMA is just trading in a flat line. That's normally very good. You've built that base, and then you're just waiting for a catalyst to rally on. One thing that could save the gold markets and send it back to all-time highs is, of course, this second stimulus deal. You know, I'm not quite sure how you know, today's news will affect the second stimulus deal. I think that's why we've obviously seen a lot of selling off in today's session. But if we do get a second stimulus deal worth of roughly between $2.2 to $2.4 trillion, then look for gold to return to all-time highs. But for now, I would, you know, if you're not in a gold trade right now, then I would pretty much just sit on the sideline and see how it plays out. You know, there is a potential that we could go and target the 200-day EMA down at roughly 1775, and you know, we could even go as low as 1800, as it's a large psychological number. So if we do go that low, that's maybe an area where I would be willing to add some buy positions and trade back up towards 1900, because it could be very choppy from where we're trading now at 1861 all the way down to 1800. You know, we could get a trade like that, but equally we could see a bounce from this level here and go back up towards 1950. So due to that volatility that this market currently offers, I'm I prefer just to basically sit on my sideline and see how it plays out and wait for a positive candlestick, which then gives me a buy signal on this chart. So at the moment, the gold markets, I'm sitting on the side. I am bullish still overall. All of the fundamentals are extremely bullish, with us being in a low interest rate environment, and there's still being a lot of tensions with regards to Donald Trump leaving the White House. There's still a lot of tensions between the US and China. So the fundamentals are still looking good for gold. But, due to the volatile conditions that we find ourselves trading in, I do prefer to sit on the sidelines for the time.